Well, the stock of Indiabulls Housing Finance has been in the spotlight recently. The stock is up close to around 86% in the last 8 weeks, and it has gained to over a one-year high. Recently, it was BlackRock Emerging Market Fund as well as Kotak Securities which have bought into the shares, and this was just last week. In fact, the stock is trading at nearly around 0.7x FY22, FY23 price to book value. If you compare the valuation, it is fairly attractive. If you compare it with PNB Housing Finance, which trades at 1.3x, Canfin Homes, which trades at 1.9x for an FY23 price to book. Indiabulls Housing Finance, of course, has seen the last 2 years which have been fairly challenging, and in that they did overhaul the entire board. Their board is now led by none other than S.S. Mundra, who is the ex-RBI Deputy Governor, and also it is led by majority of independent directors. Their return ratios did fall significantly in FY20 and FY21, wherein if you compare, they were reporting an ROA of 3.5% between FY15 to FY19. Their ROAs did drop to 1.3% in FY21, and during FY15 to 19 they were reporting an ROE of 27% on an average. Their ROE fell to 7.5%. Profits also have been nearly half in FY21 at 1,200 crore versus nearly around 2,000 odd crore in FY20, and they have also gone fairly slow on their loan book and by running down their wholesale book. As a result, management has gone ahead in the last 2 years, they've gone ahead and strengthened the entire balance sheet. They've gone ahead and raised close to around 3,800 crore worth of capital in FY21, and hence their tier 1 ratio now stands at 24%. They have low gearing at 3.4x, and the average vintage of the retail loan book stands at nearly around 4 years, and hence which means lower loan to value ratio, which means that the customers have more skin in the game to go ahead and repay their loans. They're planning to ramp up their entire retail book via co-lending partnerships with none other than HDFC Limited as well as the other other banks rather. Management also has stated that they're confident of disbursements of 2,000 crore per month. They're targeting to achieve 1.5x increase in retail customers by March 2023, and they plan to reduce the wholesale book by 33% by March 22. They have maintained spreads at nearly around 2.7%, and their cost to income ratio also declined to 12.8%. In a recent interview, Gagan Banga stated to ET Now that the management will take a call on capital towards second half post shareholders feedback, and that the real estate cycle has changed, and they believe as the COVID cases drop, positive trends seen during September 2020 and March 21 will be resumed, and this is something that we should be watching out for, that will Indiabulls Housing Finance get back on the growth path and how soon. On the asset quality front, it's been fairly good. Their FY21 credit cost was just around 1.1% of the loan assets. The total provisions now stand at 3.7% of the book, and they have provisions of nearly around 2.7x of the regulatory requirement. Their GNPA ratio was 2.6 and net NPA at 1.6 for FY21. They've also gone ahead and resumed dividend distribution. In Q4, the declared dividend of Rs 9 per share, and do know that on an average between between FY15 and 19, they declared dividend worth Rs 38 per share each year. Their credit rating has also been revised after 2 years. Recently, their rating by CRISIL was at AA, and they expect their cost of funds to come down. So yes, a lot of changes have come in Indiabulls Housing Finance. Morgan Stanley, however, does write that the transition to an asset-light model is a step in the right direction. However, they do expect the ROEs to be slightly subdued for Indiabulls Housing Finance.